Hello and welcome to Module 3 of the Forex Complete Solution Basic Trading course, Basic Candlestick Formations. Japanese candlestick charts have been used in Japan for trading for over 250 years. They were popularized in the Western world by Steve Neeson in 1987. They are one of the most widely recognized charts used by traders today, and most brokers will offer a variation of the basic candlestick chart. And here we have our basic candlestick chart. Here we have our DAX 30, and this is a weekly chart on our DAX 30. Okay, so each of these candles will represent 1 week of market activity. The range between the open and the close is referred to as the real body, and when this is filled, it means that the market has ended below the opening price. Conversely, when this is not filled, it means that the price has finished the day above where it started. Okay, so here we have a visual representation of the candlestick chart, open and close. Okay, so here is our real body. Okay, so when dealing with candlestick charts, the color is up to yourself. Okay, so each platform will generally have a default setting. That may be white for a bull market when a market is buying, and black for a bear market when the market is selling. Okay, it's either white generally or green. Generally it would be green or red. Okay, but again, this is just a visual, but so just be consistent with the color of your candle. But the main thing to be aware of is the structure of the candle. Okay, so candlestick gives us a lot of information. Each candle represents a unit of time. Okay, so on the previous chart it was a weekly chart, but we can have a month, a week, a day, an hour, down to 1 minute. So each candle has an open, high, low, and close. Okay, so we have our open, our high price, our low price, and our close price. Okay, so this is our real body, and above and below we have our wicks. So the rectangular part of the candle is known as the full body or the real body. The lines above and below are known as shadows or wicks. Now, the great thing about using candlestick charts is that it is very easy visually to see where the price is on the open and on the close of each session. If the closing price is higher than the open price, then the real body is one color, usually green. If the closing price is lower than the open, then this is usually represented by a red candle. This gives us a simple way to see how the market has traded during that particular session. Has it been an up day or a down day? Most platforms, as I say, will allow you to change the color of the candles. So use a color that you are visually comfortable with, but be consistent, okay, with the color. If you choose a color for your bull or your bear, just make sure you just leave them, okay, whether they're white or black or green or red. Be consistent with those candles, so visually every day you will know what the market is doing. So candlesticks have different body sizes. Long bodies indicate a strong buying and selling. The longer the body is, the more intense, okay, the longer the body, the more intense that the market activity is. So here we have a long body and a short body. Okay, so a long body, this implies that either the buyers, i.e. the bulls, or the sellers, i.e. the bears, took control of that market. So here we have a long body of the bulls, so the market is buying, and here we have a long body of the bears, i.e. the market is selling off. And here we have the short body and the short body here. Okay, so the short body implies very little buying or selling activity and may suggest a sideways market or a market that isn't consolidating. So here we have our long body, we have a lot of market activity, okay, on the full body, and here we have the full body is short, so we only have very little market activity. Okay, so upper and lower wick shadows on Japanese candlesticks give us important insight about the trading session. The upper wick represents the session high, and the lower wick will represent the session low. Okay, so we have our high price and our low price. So again, this is just a different color just to show the variation. Before it was white and black, but here Generally, most platforms will set it to green for bullish and red for bearish. So do what the rest of the crowd are doing, because on most platforms you will see the green and the red. But again, it's just a visual thing, but to be aware of the structure of the candle, that is the main thing. Okay, so the main four things that a candle will show us is our open price here, our closing price on the full body, this is the full body, and on our wick we have the extreme high price and we have the extreme low price. Okay, and there are varying names given to the different shaped candles, and we will cover some of those more popular candlestick shapes here now. Okay, so I'm going to bring up some of the more popular shapes of our candlesticks. So the first one we will look at is our doji lines. Okay, so a doji candle has no height to the body. As you can see, there's very little market buying or selling here. This generally means that the market is undecided with no real direction. We have different types of doji candle. If the body of the candle is near the top, this is known as a dragonfly, and if the body of the bottom is near the bottom, this is known as a gravestone doji. So a rule to be aware of when using a doji candle is if the doji appears in an uptrend, then it supports the idea of a price reversal. Okay, and I'm going to show you that now on our DAX chart, on our hourly chart, just to give you a visual representation of what we were looking at on our real-time charts. Okay, so here we have it here. Okay, so a price reversal. So we'll go over that again. I'll just bring it up there. So this candle is the one we're looking at here. Okay, so this is our hourly representation. So a rule to be aware of when using a doji candle is if a doji appears in an uptrend, so we have an uptrend and here's our doji, okay, then it supports the idea of a price reversal. And what happened when we saw our doji? The price the price reversed, okay, and the price began to sell off. And here we have a similar move and the price sold off. And here we have a similar move, and what happened? The price sold off again. So these are things you need to be aware of. Okay, so there's various different shapes of candles, and they will do different things and react in different ways on your chart. So these doji candles are ones to be aware of, and I'm going to bring up another doji here that will signify another reversal. So here we have it here, and this is an opposite. Okay, this is an opposite move. So here we have it. There we go. I'll just bring it up there. So when a doji appears in a downtrend, it may signify another reversal of price. Okay, so here's a doji. Again, I'll show you the doji. Okay, there we have it when it's at the bottom of a market, and here we have it on our DAX chart, and there's our doji. Okay, so that may signify a reversal, and it's the same when it's at the top. The market, it moved forward. Okay, so it signified a bullish move. Okay, so these are candlestick formations that you need to be aware of, and they're quite simple. They repeat over time, and they will show up again and again. So I'm going to cover some further candlestick formations just so you can get used to the different shapes and what they mean when they do appear on your charts. Here we have a spinning top. Okay, these different type of candles. These candles represent a period of indecision in the market, and as you can see, they have a very small real body. Okay, very small real body, whether bullish or they're bearish. Either one has a small body, and they do not show much difference between the opening and the closing price. They're quite close together there. This indicates that we have a large trading range. Okay, so we have an upper wick and a lower wick are quite, it's a good trading range, but the real body, the open and close, it was quite tight. Okay, and this may signify that the market is undecided. So it would be prudent not to take a trade and take a step away from the market at this point until we get clarification of a further move in the market. Okay, so this can represent indecision in the market, and until we get further clarification in the next candle, whether it was bullish or bearish, whether it was selling off, the the higher probability move on it would be to just stay out of the market. There's no need to take every trade on every candle. So the market will tell us what to do. And the market here, when I see a spinning top, is telling that it's undecided. So there's no need to take a trade off every single candle. Okay. And our next candle shape, another popular candle, is the hammer. Now the hammer is a bullish reversal pattern that forms during a downtrend. It gets its name as the market is attempting to hammer out a bottom. In a bear market, hammers can signal that a bottom may be near and that prices may start to rise again, hence the reversal. Okay, and we'll pull up our DAX chart again to show you what we mean when we look at a hammer in action. So these don't just appear in books, okay? They do appear on real charts. So here's your hammer on your real chart, and this is June the 4th. I'll just bring it up further there. It's June the 4th, okay? At let me see, I lost it there. We have it here. Sorry, I'll pull it back. There we have it here. It's a hammer, okay? So that's June the 4th. Okay, so a hammer, again, the hammer is a bullish reversal pattern that forms during a downtrend. It gets its name as the market is attempting to hammer out a bottom, okay? And hammered out a bottom, and what happened? The market reversed and bought up. Okay, so there's your hammer. And here is our classic hammer that you'll see in any book. So just to show that it does appear in your charts, okay? These will show up from time to time, and when they do show up, it's when you need to take action, and you need to know what these mean, okay? So in real time, you see this on your chart, it's time to make a decision that, okay, I'm looking to go long on that market, okay? And a few rules when looking to recognize a hammer are: the long body, the wick, is about 2 or 3 times the length of the full body. So 2 or 3 times length of the full or real body, okay? There's little or no upper wick, as we can see. There's only a small little wick here, and the real body is at the upper end of the range. As we can see, it's at the upper end of the range. So that's our hammer, okay? And we pull up the hammer then again, just to have a look. And the hanging man, okay? The hanging man is like a reversal. The hanging man is a bearish reversal pattern, okay, that can also mark a top of a strong resistance level. During a price rise, the appearance of a hanging man may indicate that sellers are gaining control over buyers, okay? And the long wick shows that the sellers are pushing the prices lower during the session. So it's the reverse. When you see this at the top of a range, you're looking for the price to reverse and sell off. So it's inverse. The hammer will be at the bottom, and the hanging man will be at the top. So again, the hanging man signifies a reversal at the bottom of the range. And sorry, the hammer signifies that the market is hammering out a bottom, and the hanging man signifies that the market is reaching a top and sellers are gaining control over buyers and the market may sell off. Okay, so these are some of the most widely seen candlestick shapes that are regularly seen on candlestick charts. Our intermediate course will provide the full range of candlestick shapes, okay, and formations to complete your knowledge of candlestick charts, because there are many. And considering this is a basic course, I just wanted to give you an idea of what you're going to be looking at on your candlestick charts, and to realize that different candles will mean different things. So on our intermediate course, we'll cover the full range of candlestick charts. And again, these are to arm yourself, so when you take your trade, you'll be looking to be on the correct side of the market, and you'll see these in real time, and you'll know how to act and react. Okay, so again, we bring up our candlestick chart, and they are not that complicated. Okay, in summary, the candlestick charts are formed using the high, the open, the high, the low, and the close of a particular time period, i.e. a week, a day, 4 hours, or an hour. If the closing price is above the opening price, then the candlestick is usually displayed as green on your chart, and if the closing price is below the opening price, then a red candle is generally formed on your chart. The rectangular section here, the section of the candle, is called the full body of the candle. The thin lines above or below the body of the candle are called either wicks or shadows. In some books or references, they'll be called wicks, and in some they'll be called shadows, but they're the exact same thing. The top of the upper wick is the high price of the session, and the bottom of the lower of the wick is the low price of the session. A long body will indicate a strong buying opportunity, and a short body will indicate very little buying or selling activity. Okay, so these shapes and patterns will repeat over and over. So do not worry if on hearing this information for the first time that it may seem complicated. It isn't. Soon this will be second nature for you, and you will recognize the various candle shapes and sizes, and you will know how to trade accordingly. So thank you very much for taking the time to listen to our module on basic candlestick chart formations, and I hope you will enjoy module 4 on using technical indicators. So thank you very much, and I will speak to you soon. Goodbye.